NVIDIA, the leading developer of graphics processors and chipsets for personal computers and game consoles, has seen its share price fluctuate wildly in the past few months. After reaching a record high of $419.38 on May 24, 2023, following a stellar earnings report that showed a 103% increase in revenue and a 224% increase in net income year-over-year, the stock plunged to $378.34 on May 31, 2023, wiping out more than $80 billion from its market capitalization too. This was the second time that NVIDIA lost its trillion-dollar status, after briefly crossing that milestone in February 2023. What is driving this volatility? There are several factors that could explain the swings in NVIDIA's stock price, such as competition. NVIDIA faces fierce competition from other chip makers, such as Intel, AMD, Qualcomm, and STMicroelectronics, who are also vying for a share of the growing markets for artificial intelligence, AI, autonomous driving, cloud computing, gaming, and cryptocurrency mining. Some of these competitors have lower price-to-earnings (PE) ratios and higher dividend yields than NVIDIA, which could make them more attractive to some investors. Supply chain issues. The global semiconductor shortage that has been affecting various industries since 2020 has also impacted NVIDIA's ability to meet the surging demand for its products. The company has warned that it expects supply constraints to persist throughout 2023, which could limit its revenue growth and profitability. Regulatory hurdles. NVIDIA's proposed acquisition of ARM, the British chip designer that powers most of the world's smartphones and tablets, has faced opposition from regulators and rivals who fear that it would create a monopoly and stifle innovation. The deal, which was announced in September 2020 for $40 billion, is still pending approval from authorities in the US, UK, EU, and China, and could face delays or even cancellation. Market sentiment. NVIDIA's stock price is also influenced by the general mood of the market, which can be affected by macroeconomic factors, geopolitical events, industry trends, and investor expectations. For example, the recent rise in inflation and interest rates in the US has sparked fears of a slowdown in economic growth and a correction in the stock market, which could hurt high-growth and high-valuation stocks like NVIDIA. Despite these challenges, NVIDIA remains a dominant force in the semiconductor industry, with a strong competitive advantage, a loyal customer base, a diversified product portfolio, and a visionary leadership. The company is at the forefront of innovation in AI, which is widely regarded as the next frontier of technology and a key driver of future growth. NVIDIA CEO Jensen Huang has said that AI is creating golden opportunities for the company and that 2023 is a perfect year to graduate thanks to AI. Analysts have also been bullish on NVIDIA's prospects, with an average price target of $450.67 and a consensus buy rating too. NVIDIA's stock price may continue to experience volatility in the short term, but in the long term, the company has the potential to deliver solid returns for its shareholders. As Huang said in the latest earnings call, "We are still in the early innings of this game.